Hey, all, Chris Parry here with your 3-minute hit today from EQUITY.GURU. Today we're talking about Amped Ventures, AMPD. I've talked about them a lot before. The TLDR is they're in three verticals. One is high-performance computing, delivering computing services to groups like AI companies, video render companies. They've been doing that for the longest. That's been a business for them for some time, and it's just a good, steady little builder base of a business. The second thing they have is exposure in virtual movie production. That's a little bit more high risk, high reward. There's upside there. They're doing deals, actively pursuing deals with large multinational companies in the entertainment space. They've had some success. But if I'm honest with you, those deals have taken a lot longer than they anticipated to really lock down, and I think drained them a little bit on the treasury side. They've staffed up in the expectation that those deals will hit. But when they do hit, you can't go out and use that big multinational's name promoting yourself, because usually these deals are commercial in confidence. So, struggles. And the third thing they've done is they built one of the world's largest volumetric capture studios. Volumetric capture is how you build metaverses, how you build VR-ready content. If you want your music video to be something where the viewer doesn't just stand in front of it, but can also stand next to it, that's volumetric capture. They've finished that. That's in existence now, and in their opinion, will be cash flow positive by the summer. So that's good news. So why is Amped down from 10, 11 cents over the last several months to 4.5, 5 cents today? Put simply, they put out a note, which I think is a real positive, but I can see that the market would look at it and say, ooh. The note is that the company has decided that rather than putting all of its eggs in one basket, that is the stuff that's coming, that they're going to restructure, lose some bodies, potentially at management and board level as well, and get themselves right-sized. If I'm reading between the lines, what they're looking to do is reduce the cash flow burn to 0 per month. If they can reduce their monthly burn to 0, then this company has time to put those bigger deals together and start bringing in the sort of revenue that they've been promising for a while. Now, I can see that there'd be some people who will say, wait a second, you're telling me that you're going to move things back from the high risk, high reward to just short-term security with a longer-term outlook on building to those bigger things? I don't want that. I want immediacy. I want 10x. I don't want a safe, good little builder. And those people, they're the ones that are out. That's why the stock is down to 5 cents. Now, there are other people like me who say, finally, you guys have been spending all your money on staffing for the last year and a half, and you've got too much staff for what's coming back. I realize that you're wanting to build something. I realize that your eyeballs are on the metaverse, on billions. But you got to actually survive the interim. You've got to actually be able to say, next month we will be here. Or those big companies that are going to get you to the metaverse will not do business with you, right? They don't know that you're going to be around for the next 3 years, they ain't going to move their video render from their existing place to your place. Just not going to happen. So what Amped has needed for a long time, and I've been saying for a long time, is to rationalize things. Cut down on the billion outlook, bring it back to the million outlook. Can you increase your revenues 30% and decrease your expenses 40%? Now, to get there, you might need to raise a bit of money. And Lord knows, Amped has been out there raising money relentlessly for the past couple of years, mostly because they've been raising just enough to get them to that place that they think they need to be when the deals that they're pursuing will likely close and start paying off. But those deals take time. Big deals with big companies can take years, not months, not weeks, certainly not days. So the outlook of having to go to the market continually and raise money, what you end up with is dilution. And when you have dilution, you have what's happened to the share price for the past 6 months, which is every time there's good news, there's not enough people able to buy enough to lift the stock. It's too illiquid. Personally, if I was Amped, I'd do a rollback. I'd roll this thing back 50 to 1. I'd roll it back 50 to 1. You're going to take a big ass hit straight off the back of that, but your share price will be back at a place where you can actually go out and raise some money and have some liquidity. And I have good news, bringing your stock back. That's what I would do. They ain't going to do that. They're not doing the full Band-Aid rip. They're not doing the dig out the cancer. They're just doing Band-Aid off. Let's see what we can do in the short term. Now, to go out there and tell the market that, hey, you know what, come see, come sa, we're restructuring. And, you know, who knows who might go. But the end result is going to be that this company exists long enough to fulfill its promise. I like that. I think that's good. I'll take the haircut of 45% over the last few days. It happens. I'll take that, because at the end of that, the plane's belly scrapes the runway and then begins its long, slow ascent to where it needs to be. Short-term pain, long-term gain. Now, honestly, if you came in at a 10-cent financing or 11-cent or 14-cent, or like me, back at like 39-cent financing, a 5-cent stock doesn't make you happy. It's a big red hole on your portfolio. Every time you open up your portfolio, you look at that thing and you think, here's the thing. I'm not looking at my buy-in price of this anymore because it doesn't make any sense. I didn't buy in to flip it over a weekend, buy at 39, sell at 45. It's been higher than that 39 since I bought it. It's also been lower. I am here for 5 years down the line when I honestly believe that this group of people and this company will have managed to figure out how to make this thing work and will be accelerating into new technology that we don't even yet understand fully. The company's two big problems have been, one, people don't understand the tech. Two, they've raised money as they've needed it rather than having that big 30 million starting pot that they can build from. They've always had to go out there and say, fuck, okay, well, let's just get another 500,000. Oh, let's just get another 750,000. Oh, we'll just get another million. Man, every time you do that, there's too much paper out there. There's more and more paper, more and more warrants. It becomes harder and harder to raise the price of your stock. This company needs the enema that it has just been given. It needs the full clean out. It needs to only employ people that are bringing a return right now, and future programs that may bring massive wealth need to slow down or even stop if they cannot sustain themselves in the short term. It sucks because a lot of people bought into AMPD because of the great opportunity that's out there. We that have actually looked into this tech, that have gone down and seen what they've built, that have seen it in operation, understand that this is major game-changing technology that they're into. It's not a promise. It's not a one day. It's not a black box that you can't see. You can go down there today and you can see it in operation. And by the summer, they're looking at that volumetric capture studio as being cash flow positive. But we're not in the summer. We're in the spring. And right now, the company needed to do the right thing, the smart thing. It needed to bend over. It needed to take what's coming, brush itself off, and say, now we are fixed. This is the only way to make this company fixed, is to take this short-term pain. I'm all for it. In at 39 cents, sitting there at 4.5 cents, looking at a big red loss. If I get out today, I ain't getting out today. I ain't getting out tomorrow. As the stock came down today, I didn't sell into it. I'm holding that stock because I believe the 39 cents that I bought into it will one day be a very, very low price. It will have been a good deal. And the only way it gets there is if AMP does the thing that it announced today, which is to stop spending money ahead of its skis and to get back to a place where any money that is spent is counted by money coming in the door. I love that they're making this move. I'm all for it. Big supporter, even in the red. If people are going to disagree, and I get it, but people are going to disagree that they should play it safe. There are people out there that are going to say no. All or nothing, ride or die, throw it all at the wall. Let's go, because the return is potentially massive. I want this company to just keep existing. I want it to keep existing until people catch up to what they've got and give it the right price for what they've built. We ain't there yet, but we're getting there. Props to AMPD for doing the hard thing, the unpopular thing, but keeping the doors open and getting to a place where this company can actually do what it set out to do.